Welcome back everyone to my world of stocks. My name is Ali, of course, and you know what? Today, guys, we have a very special video because we're going to be discussing how to build a stock portfolio from scratch with only $100 a month for 2024 and beyond. Now, I chose $100 because I just feel that's kind of a reasonable, kind of small amount. A lot of people spend that much on just a gym membership or their cell phone bill or internet or a few streaming platforms. And I think investing is just as important as any of those things. So I'll show you how to do it with just $100. May not seem like a lot at first, but it can really add up over time. And I'm also going to show you within the context of going into next year, because I think 2024 is going to present us with a lot of unique challenges like high inflation, high interest rates, and the very elevated, very real risk of a recession. So I think the stock market is going to be extremely volatile. And I'll show you how to navigate through that. But here is the best part of all. I'm not only going to talk to you about how to navigate all those challenges, I'm actually going to navigate through them for you myself. In fact, I'm going to be creating a brand new stock portfolio from scratch where I'll be investing $100 of my own money into this portfolio every single month, and I'll be making monthly update videos on this channel showing you what stocks I bought or sold and how the portfolio is doing and giving you full transparency of it. So it's going to be a ton of fun. You're going to want to make sure you subscribe so you don't miss any of those update videos. But with that said, there are a few caveats to this. Now, if you do want to skip some of this and you just want to get to the part where I talk about how to structure the portfolio and all that stuff, I put chapters down in the time bar for you so you can skip all of this if you like. But I just want to take a couple minutes to explain how this new portfolio will work and how my subscribers can keep track of it. Okay, now first of all, this has nothing to do with my own personal private larger stock portfolio. I'll still be making update videos on that portfolio. You won't miss out on any of that content that I've been making over the years. But this is going to be just a brand new portfolio. It's going to be more of a public kind of community portfolio with a lot more transparency and even some interaction. Like, for example, I'm going to have votings where I will let you guys vote on certain stocks that we could add to the portfolio. But ultimately, I'm going to be the head kind of investment manager, the portfolio manager. I'll be steering the portfolio, making sure that it's heading in the right direction. I'll be making all final decisions myself. Now, the way it's going to work is every single month, I'm going to deposit $100 into my new SoFi investment account that I just opened up. And I'm going to be using that money to purchase stocks over time on the SoFi platform. And every month I'll make an update video showing you on YouTube how the portfolio is doing and giving you full transparency of it. Now, for anyone that is supporting me over on Patreon or in the YouTube membership and you have access to our community Discord, you're going to get some bonus perks there. So, for example, I'm going to be posting every single trade that I make as soon as it happens over on the Discord, and this is what it's going to look like here. So on Discord, we have all these separate topics on the left side there, and when you expand them, you get all these different chat rooms within them. So I added this new one here called the Community Portfolio, which I'll be adding more chat rooms to over time. But you can see there that I deposited $100 into the account, and for example, there's I created this trades room at the top. And this is where I will be posting every single transaction that I make in real time. And I already posted a few things here on Friday just to test it out. So I got a free $5 stock bonus for signing up on SoFi, and I chose Google for that stock. And by the way, I'll put my referral code down in the description of this video in case you ever want to sign up for SoFi too, because you'd actually get $25 bonus instead of just the $5 that I got. But you know, that does help me. If you don't want to use that referral code, I totally understand. It's no big deal, but just I'll put it there in case you want it. But then I also posted a few more trades, so you can see that I also bought another $15 of Google, another $10 of Amazon, and another $5 of Microsoft. And again, this was just to test it out. I'm going to be buying, of course, tons of other stocks and much more over time. But I just wanted to give you a little taste of what it would look like, and I'm going to be posting all of my trades as soon as they happen right on there, so you'll be able to see that. By the way, this is not just for you guys or anyone to just copy what I'm doing. You always have to do your own research and make your own decisions. I just think it's, you know, it kind of makes things a little easier when we get to see what other investors are doing, bounce ideas off of each other, which is what the Discord is really all about. And it just makes investing so much funner. So I'm really excited for it for those reasons. And by the way, I am sorry that the Discord is behind a paywall. It's really the only way that I can keep this YouTube channel sustainable. I need to have a Patreon because of all the time that I put into YouTube. I can't have a job outside of this. It takes too much time. And really, any of that support you guys give me, it means a lot to me. I really appreciate it. And I'm just trying to add some perks and stuff for anyone that does support me that way. So that's why I do it. But again, you will also, if you don't have the Discord, you're just watching my YouTube videos, you will get the monthly update videos for free. I never put any videos behind a paywall. That's always going to be here free on YouTube. With all of that out of the way though, it's time now to talk about how to structure this portfolio. And let's talk about what type of strategy I'm going to use going forward, given all the challenges. Now, obviously, when talking about challenges going into next year, the giant elephant in the room is the very high risk of a recession right now. In fact, the New York Fed's highly regarded recession watch tool is currently at the highest reading in over 4 decades, which has accurately predicted a recession every time it was anywhere close to our current levels. The yield curve has also hit its biggest inversion level in over 4 decades, which has also preceded a recession every single time since the late 70s. And we know that over 90% of corporations surveyed by CNBC are actively preparing for a recession as well. So with inflation and interest rates and mortgage rates as high as they are, it is looking very likely that a recession could hit, or at least some type of significant economic downturn within the coming year. Now, of course, that could still be avoided. Inflation could get under control. The Fed could lower interest rates, which I think would actually boost the economy and the stock market. But regardless of how all of this plays out, the point is that as investors in the stock market, we have to be actively prepared for anything that might come our way. And I just think that in a scenario where there is so much uncertainty, we are going to be looking at very high levels of stock market volatility. And with high levels of volatility, with high levels of uncertainty, I feel that a long-term mindset would serve us best here, especially if we're working with only a small budget of $100 per month to invest in stocks. So the plan is going to be to go into this portfolio slowly, buying in small amounts over time and really making use of the few advantages that we actually have on our side, especially 2 specific ones. Number 1 is going to be the ability to buy in small amounts using something like SoFi, which allows us to buy fractional shares of stocks for as little as $5 a piece. Now you could use Robinhood. They have as little as $1. The only reason I'm not using Robinhood is because I already have it for my personal portfolio. So I had to create a SoFi one for this one, but I actually love both platforms. And I started setting up SoFi. It's really cool how it integrates all the finances together. It's an awesome platform. So I'm having a lot of fun on it. But the point is using one of these platforms that lets you buy fractional shares, and that's going to allow us to buy in small amounts regardless of what the actual dollar value is, and it'll let us invest in our favorite stocks. The other major advantage that we have is time, so especially if we have just such a small budget of only $100 a month and we're buying in fractional shares in small amounts. Well, we're going to need time to really build up this portfolio, make it larger over the years. So you want to be patient, have a long-term minded strategy, hold stocks for years or even decades, and be buying slowly in small amounts using fractional shares, which is also going to be great for all the market volatility that we're probably going to encounter, because as stocks are moving up and down and a recession might hit, economic downturn, the stock market falls, well, we want to make sure that we can buy much heavier as stock prices go down and get those lowest prices as possible. Now, if there's any kind of short-term minded traders watching this video, you might be asking the question, well, why not just wait for the recession to happen and the stock market to crash and then go in and buy at those lower prices at that time? And my response is pretty simple. For one, there's never a guarantee that the stock market will actually crash right when you think it will. And even when it does, and there's a recession and prices are crashing and falling and the world looks like it's ending, most people are panicking and they're in even more fear during that time, and they think prices will just keep going lower, so they tend to just keep waiting and waiting and waiting. The market recovers and they think it's kind of a fake recovery and they just keep waiting, and then the market takes off and they ended up not buying anything. I'm not saying that's everyone, but it's a lot of people. And I can give you some examples. I mean, even recently during the 2020 pandemic crash, I made a lot of videos talking about all the stocks I was buying, And I had quite a lot of comments from people kind of angry, I would say kind of some haters maybe, but some people criticizing me or calling me dumb for buying stocks. And the reason why is because they thought that the world was ending. And I'm not hating on them. I'm not like knocking on them for that. There was, a lot of fear and stuff going on. But these are people that thought that stocks would never recover, and of course they did recover. And we could even go further back than that. We could go back to the Great Recession. I mean, did you guys know that the stock market actually bottomed out before the Great Recession even ended, and everyone was still saying that prices were going to go way lower and everything was doom and gloom, and yet the market was actually going up and it was recovering and it was about to have one of the biggest bull runs in history. And yet even for years following that, everyone was still screaming about a double dip recession, that it was still all doom and gloom and things were about to turn way worse than you thought, but yet the stock market actually rose. So my point is, it's very difficult to predict these things, and I just don't like making excuses for why I stay out of the stock market. I can't wait around for everything to be perfect. I can't sit around waiting for America to pay back all its debt, or for there not to be any conflict in the Middle East or somewhere else, or for China to stop being a threat, or for consumers to stop using credit cards, or for the Fed to end, or for the government to stop being corrupt and wasting all our tax dollars. There's always going to be excuses. There's always going to be fear pushed out there of a recession, of a stock market crash. And look, that does happen. It's a normal part of life, of our economy, of how things go. But it's not something to be afraid of. Instead, I have this much calmer, long-term strategy where I buy in small amounts, and when things go south, I just buy heavier, and I try to benefit from that over the longer term. And for sure, my portfolio will probably perform poorly for some time because of that, and I'm sure I'll get some funny comments about it too, but I'm not here to please everyone. I'm here to just follow my investing principles that have always served me best to build this successful portfolio over time. So the way it's going to go is every month I'll deposit $100 into the account. I'll use that to buy the stocks that I think are the most attractive at that time. And I will also, and this is very important, I will also be keeping some of that money as cash in the account in case the market ever has any bigger dips in the future that I want to take advantage of. I want to make sure I have those cash reserves in order to do that. And that's going to fluctuate from month to month. Sometimes I might spend 40 to 50% of my monthly budget on stocks. Sometimes it'll be much more than that. Sometimes it might be less than that. If there's a downturn in the market and I see just amazing prices, I might spend even more than the monthly budget, and I might go back and dip into the cash reserves that I've been building up from prior months. So it's gonna vary per month, but overall the strategy is to consistently be buying stocks every single month, but also making sure that I do put some cash on the side so that I have that for any bigger buying opportunities that may arise, which I think will happen because there's going to be so much volatility. Now, normally with that cash, you would want to move it over to some high yielding money market fund or savings account. But in this case, because it's going to be more of a public portfolio that I'm creating, I'm just going to keep everything on SoFi so that it's a lot easier for me to show it to you guys. So instead, I'm just going to be taking advantage of SoFi's sweeping feature, where it basically sweeps the cash over to a bank account that yields me some interest. I'll be collecting that interest, using that to invest in more stocks. And SoFi also just keeps that cash right there available so I can use it immediately whenever I want. So it's kind of a cool feature. I'll just be utilizing that, keeping everything on SoFi so that it's easier to show you guys and it's all more simplified. Okay, now with all of that said, of course, having the right mindset and strategy is going to be key to the long-term success of the portfolio here, but it's not everything. Another key element is going to be the structure of it. We need to have a solid structure here, and because this is more of a beginner kind of budget-friendly portfolio, I want to keep this too as simple as possible. So the plan is to buy many different stocks and have it be a very well diversified portfolio, which I think also adds a lot of safety, especially given all the craziness and headwinds coming in the following year. But I want to spread these investments out across, I would say, 5 main categories of different types of stocks. One of which will be core foundational stocks, where I only buy the most solid, really large, and profitable, high quality businesses that I can rely on for holding my portfolio together, weathering any type of economic storm, and still performing very well long term. And I'll use these as kind of the foundation to build the rest of my portfolio around. So think of stocks like Microsoft, Amazon, or especially Google, for example, who is a worldwide leader in internet technologies and does hundreds of billions of dollars in sales and tens of billions in profit, and yet the stock still trades cheaper than the sector on a PG ratio basis. I think it's super attractive. Another category I'll be relying heavily on, though, will be dividend stocks, since this portfolio is all about long-term growth. And the great thing about dividend stocks is that they can not only increase in the share price alone if the valuation is cheap, but they can also provide me with some great dividend payments that I can not only collect, but actually reinvest right back into more stocks over time, and thus creating kind of a snowball effect on my portfolio to help it grow larger over the long term. And here I want to find market leaders with attractive stock prices to maximize that long-term potential. So think of stocks like maybe Tyson Foods, Verizon, Snap-on, or Medtronic, for example, who is not only the world leader in medical devices, but also has a very attractive valuation that is over 20% cheaper than the sector on a forward PE basis. And it also has a dividend yield of close to 4% with almost 5 decades of consecutive growth. So a solid dividend that I can probably count on for many years of payments well into the future. Now, for the final 3 categories, I'll be breaking those up into value, growth, and speculative. Now, for value, I still want solid companies, but that are currently down to a cheap valuation with good turnaround potential. So something like Disney, for example, who's seen their stock plummet to the lowest levels in the past decade. And while there are legitimate reasons for that crash, I still believe they can turn things around as one of the world's largest media and entertainment giants with tons of iconic brands. Now, on the other side of things, for growth, I want exciting companies that aren't necessarily cheap, so I do need to be careful with how much I buy in these, but these are companies that are really on fire or have huge future potential, which is great for the overall strategy of this long-term minded portfolio. So I'll typically choose leaders of growing markets like Tesla, for example, with EVs, or Nvidia with artificial intelligence, both of which, by the way, also have some crossover in each of their markets too. And then finally, for the speculative portion, I'll take some high-risk stocks here, but only those that have very high reward potential. And look, there's no way that I'm going to hit on all of these. I fully expect to lose money on at least a couple, but I might also hit huge on a few of them, as they may be smaller or unprofitable companies right now, but in the future, they have tremendous potential to grow larger. So I might want stocks like Palantir, for example, who's an AI data management company that is crushing it both in the private and public sectors, or maybe Teladoc Health, who's a leader in telemedicine, which I think is a future of healthcare, but the stock is currently down over 90% coming off the pandemic. Or maybe I'll just take a couple beaten down foreign stocks like Baidu or Alibaba, who is actually a very large and profitable e-commerce leader, but has seen its stock crumble by over 70% because of all the conflict between the US and China, and of course other issues out there too. But anything like those would fit this category pretty well. And again, just the overall strategy of this portfolio is going to be to diversify across many different markets, many different areas with many different stocks, and really build this thing up over time, buying in small amounts. And look, I'm just super excited about this. You could probably tell by the video, but I can't wait to make update videos for you guys on YouTube. I can't wait to talk more with any of my supporters over on Discord. It's going to be so much fun, and I hope you're all looking forward to it too. But I'd love to hear your feedback. What do you guys think about this? Do you think it's a good idea for me to do this on YouTube? I'd love to hear your thoughts, but leave them down below. Look, I got some stocks to go look at to purchase for this portfolio, so I got to run. But I will catch you in the next video, my friends. I hope you're all doing well. I wish you success with everything coming in, in the coming year, and anything you do in the stock market. But thanks again for everything. It really means a lot to me. But I'll catch you in the next one. All right, take care, everybody. Bye-bye.